For years, buying a home in Florida felt almost impossible. Prices kept rising, competition was intense, and many buyers were priced out completely. But now, something is quietly changing. Homes are sitting longer. Price cuts are becoming more common, and in some cities, values are beginning to move in the opposite direction. The question is, where is this happening first, and what does it signal for the rest of the market? What we are seeing is not a sudden collapse, but a shift in momentum. During the pandemic, Florida experienced one of the strongest housing booms in the country, driven by migration, low interest rates, and lifestyle changes. But conditions have evolved. Borrowing costs are higher, insurance premiums have increased, and affordability is becoming a limiting factor. Recent reports indicate that while some parts of Florida remain stable, others are beginning to adjust, sometimes more sharply than expected. These changes are not random. They tend to appear first in areas where growth was fastest and costs have risen the most. If you value research-driven insights into housing trends and economic shifts like this, consider subscribing. Each video is built on careful analysis to help you better understand what's changing and why it matters. Kate Corral is often one of the first markets analysts look at when tracking changes in Florida real estate. After rapid price growth, inventory has increased noticeably. Homes are taking longer to sell, and price reductions are becoming more frequent. A key factor here is oversupply. Construction expanded quickly during the boom, but demand has slowed under higher mortgage rates. For many sellers, expectations are now being adjusted to meet a more cautious market. In Northport, the shift is becoming more visible. Listings are staying active longer and buyers are negotiating more aggressively. Analysts are noticing that this is less about economic decline and more about rebalancing. Prices rose quickly, and now they are correcting toward more sustainable levels. Still, for recent buyers, even modest declines can feel significant. This is where the trend becomes more noticeable. Tampa was one of the fastest-growing metro areas in recent years, but affordability is now a key pressure point. As home prices surged, income levels did not keep pace. Combined with higher interest rates, this has reduced the number of qualified buyers. The result is softer demand and gradual price adjustments. It is not dramatic, but it is consistent. Jacksonville reflects a quieter transition. Prices are not falling sharply, but the pace of growth has slowed considerably. Sellers who once expected immediate offers are now making price adjustments. This suggests a market that is stabilizing after rapid expansion, rather than declining outright. But the next city reveals a deeper cost issue. Orlando's housing market is closely tied to service sector employment and population growth. As living costs rise, including insurance and property taxes, buyers are becoming more selective. In some neighborhoods, this has led to price reduction. The trend here highlights how broader economic pressures can influence housing demand. And then comes a market shaped heavily by external costs. In St. Petersburg, rising insurance premiums are playing a larger role in buyer decisions. Coastal exposure has increased costs significantly, and this is affecting affordability. Some buyers are stepping back, which is slowing demand. As a result, price growth has stalled, and in certain segments, values have begun to edge downward. But the shift becomes even clearer in the next location. Fort Myers has faced multiple pressures at once. Concerns about storm risk, rising insurance costs, and changing demand patterns have all contributed to a softer market. In some areas, price adjustments have been more noticeable. This reflects a shift in how buyers assess long-term costs and risks. However, even major markets are not entirely unaffected. Miami remains one of Florida's most resilient housing markets, particularly in the luxury segment. However, analysts are noticing a divide. High-end properties continue to attract global buyers, while mid-range housing is facing affordability constraints. In some cases, this has led to slight price corrections, showing that even strong markets are not immune to broader trends. But the next city highlights the impact of changing migration patterns. Palm Bay experienced strong demand during the remote work surge, but as work patterns stabilize, some of that demand is easing. Inventory is increasing, and price reductions are becoming more common. This suggests that part of the earlier growth may have been temporary, driven by unique circumstances. And finally, the most pronounced shift. Punta Gorda stands out as one of the markets where adjustments have been more visible. Higher ownership costs, combined with slower demand, have created a more challenging environment for sellers. In some cases, price declines have been significant enough to reset expectations entirely. This reflects a market that expanded quickly and is now correcting at a similar pace. Across Florida, the housing market is not moving in a single direction. Some cities remain stable, while others are clearly adjusting after years of rapid growth. What stands out is that these changes are happening first in areas where affordability pressures and costs have risen the most. For buyers, this may create new opportunities. For sellers, it may require a shift in expectations. And for investors, it raises an important question about timing and long-term value.